You remember how Jio completely changed the game for mobile data in India, right? Well, now they're coming for something even bigger, your money. Jio Financial Services, or JFSL, has launched with this massive ambition to totally reshape the country's financial landscape. So, what's their big play here? Let's dive in and find out.
And yeah, they are not being subtle about it at all. This quote here from director Isha Ambani, it says it all, right? Giving wings to bold aspirations. They're not just dipping their toes in the water, they're trying to create a tidal wave.
But that's the billion-dollar question, isn't it? Can a company that's an expert in mobile data really become India's next financial powerhouse? The playbook they used for telecom, can it actually work in the super complex, super regulated world of finance? That's what we're going to unpack today. The grand plan, the initial numbers, and yeah, the reality check from the market. Okay, so their whole game plan really starts with this one phrase: access, progress, now. And look, this isn't just some marketing fluff. It's literally their entire strategy. The idea is to empower millions of people with instant tech-first access to everything: loans, investments, insurance, all of it, right there on their smartphone. And if you look at their official vision statement, you'll see three words pop up again and again: digital, simple, and secure. What they're really trying to do is just get rid of all the confusing stuff that comes with traditional banking. It's a huge push for financial inclusion, right? The goal is to make finance easy and safe for literally everyone. Doesn't matter if you're a pro trader in a big city or a small shop owner in a village. So the big question is, how on earth do you actually deliver simple, secure financial services to a billion people? Well, for Geo, the answer is pretty clear: technology. Let's take a look under the hood at the digital engine they've built to make this happen. And here it is. This is their main weapon in this whole fight: the Geo Finance app. Think of it as their digital command center. It's meant to be the one-stop shop, a digital superstore for every single financial product you could possibly need, all living on your phone. You know, what's really smart about their approach is how they've built their whole business around these four core needs. It's basically the entire financial life of a person. They cover you when you need to borrow, when you're just doing your daily transactions, when you're looking to invest, and of course, when you need to protect your assets and your family. It's a complete 360-degree strategy. And this is where they think they have a killer advantage. Some might even say an unfair one. First, you've got the sheer numbers: instant access to over 450 million Geo Telecom users. That's just staggering. Then they're layering on the smarts with AI for personalized offers. They've roped in heavy hitters like BlackRock for partnerships, and it's all powered by a massive data lake. This is the high-tech arsenal they're rolling out. Okay, so the vision is massive, and the tech behind it is seriously impressive. But here's the real question: is any of it actually working? Let's get into the performance report and see what the numbers are saying. Whoa, okay, right off the bat, this number just jumps off the page. A 101% year-over-year growth in their total income. Let that sink in. The amount of money they're bringing in has more than doubled in a single year. That's not just growth, that is absolutely explosive. And look, this isn't just some accounting trick. This growth is being fueled by actual people. We're talking 8 million monthly active users on their digital platforms. This is the proof in the pudding, right? It shows their main strategy, turning all those Geo Telecom users into finance customers, is actually starting to work. But, and this is a big but, this is where the story takes a turn. This chart tells you everything you need to know. On one hand, you've got that amazing 101% revenue growth we just talked about. But then you look at the other side, and profits are down 9%. And get this, expenses have gone through the roof, up by 332%. So here's the central puzzle of Geo Financial right now. They're growing like crazy, but it's costing them a fortune. So all of this brings us to what the market thinks. With such a mixed bag of numbers, it's no surprise that investors are being, well, pretty cautious. So why aren't they jumping for joy? Let's figure that out. All right, first up, let's hear from the company itself. If you read their press release, it's all sunshine and roses. They're talking about significant acceleration and business momentum. It's a very positive, very optimistic story. But then you look at the headlines from the news, and they're telling a completely different story. They're zeroed in on that 9% drop in profit. And that right there, that's the huge disconnect. The company is selling a story of growth, but the market wants to see a story of profit. And this table, this really gets to the heart of why the market is so hesitant. Just look at the PE ratio. That's price to earnings. It's a quick way to see how expensive a stock is. Jio Financial is trading at a multiple of 100. 100! Now look at the established players like Bajaj Finance or Bajaj Finserv. They're not even close, sitting around 35 or 38. So what this means is that investors are paying a massive premium for Jio stock today, banking on the hope that it will deliver huge profits way down the line. So what you get is a classic case of a divided street. The experts are totally split. On one side, you have analysts screaming buy, betting that the long-term vision will pay off. But on the other side, you've got just as many saying hold on or stay away, pointing to that sky-high valuation and all the risks. There's just no easy answer here. So where does that leave us? What does the road ahead look like for Jio Financial? Well, it's really a story of weighing some pretty massive rewards against some equally massive risks. Let's start with the good stuff, the rewards. Their advantages, or what investors call moats, are just incredible. You've got that insane access to 450 million Jio users, plus another 250 million Reliance retail customers. They can embed finance right at the checkout counter. They have the financial backing of Reliance, which means deep, deep pockets. And it's all built on a modern AI-driven platform. I mean, that is a seriously powerful combo. But then you flip the coin, and the risks are just as real. First, just because you can grow doesn't mean you can be profitable. Scaling a lending business is notoriously difficult. Then you have the regulators, who are watching their every move. Lending to people who are new to credit, that comes with a much higher risk of defaults, so their risk management has to be perfect. And let's not forget, the competition from nimble fintechs and giant traditional banks is absolutely brutal. They really have very little room for error. So after all that, it really boils down to one simple question. We've seen the incredible potential, right? The technology, the brand, the hundreds of millions of customers just waiting. But we've also seen the serious red flags, the skyrocketing costs, the falling profits, and a very nervous market. So the ultimate question is this. Can Jio's ultimate weapon, that massive user base, be turned into a profitable financial powerhouse before investors lose their patience? The answer to that question? Well, it could very well shape the future of finance in India for the next decade.